everyone expected 25. I think if they go 50, that will be nuclear catastrophe for financial markets 1 or 2 trading days after the effect. You'll see a massive rally and everything because everyone believes that the more they cut rates, the better. But I actually think it points to a deeper rot in the global financial system, and that will come through in much more depressed prices after the fact.
It's Wednesday, September 18th, and this is Markets Daily, hosted by me, Jen Sanasi. On this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So whether you're actively trading or just fascinated by the volatility that is the crypto markets, this show is your compass to understanding what's happened, where we are, and where we're going. Good morning, everyone. Today is a very special show. I'm joined by my co-host today, Managing Editor of Technology and Protocols, Brad Cowan, and we have the pleasure of talking to BitMEX co-founder and Maelstrom CIO Arthur Hayes. Now, Arthur, let's get right into it. The Federal Reserve meeting is happening today in the United States. What do you think we're going to see, and how's it going to impact markets?
So the question is whether they're going to do 25 basis points or 50 basis points. I, at a high level, think that they should not be raising rates. I believe that the U.S. economy is quite strong. If you've seen the GDP prints over the last 8 or 9 quarters, it's been consistent growth. The U.S. government continues to spend an insane amount of money, which is keeping economic growth at a very fast pace. And obviously that helps the election chances of Kamala Harris and her running mate, which I think is the goal of the current Democratic administration. So the Fed cutting rates when you have massive government spending, you have inflation that's above their target, I think it's a mistake. I think that inflation is going to accelerate into the fourth quarter if they decide to continue cutting rates. And I think that the response is going to be, if the markets start to falter, they're just going to do more of it, and they're going to make the problem even worse. So if they do 25 or 50 and the markets react opposite of what they believe, so I think everyone believes that the markets are going to go up. If the more they cut, the more the markets go up, whether that's stocks, bonds, cryptos, all that kind of stuff. I actually take a contrarian view that the more they cut, the more the markets are going to dislike that maybe 1 or 2 trading days after the fact. But they're not going to learn their lesson. They're just going to keep doing more of it. So we're going to get a very quick cutting cycle. So that's sort of my view.
Tell us a little bit more about that. Dig a little bit deeper into that for me. Let's say they cut rates. How do markets react? And more specifically, how do crypto markets react?
So I believe, and I've written extensively about this, that the most important macroeconomic variable is the dollar-yen exchange rate. And so the dollar-yen exchange rate weakened a lot because the BOJ kept rates at 0 or negative, and the Fed and every other major central bank raised rates starting in March of 2022. So the differential widened a lot. Dollar-yen went to about 162 on the top side. And then a few things happened. The Fed signaled that it was ready to start cutting rates in the summer of this year. And the BOJ indicated that it would start raising rates. And it did raise rates 15 basis points on July 31st. And we saw the subsequent week, markets were down 10% around the world. You had sort of almost like a financial panic because the dollar yen strengthened so much and so much leverage was removed from the system because those who borrowed yen had to quickly cover it to make sure they didn't lose too much money. So if the Fed's going to do 25 or 50 or however many basis points it's going to do, and now in the subsequent meetings, it's going to continue to narrow that differential. Dollar yen will continue to strengthen. The yen strengthens. The actual nominal value goes down. And people continue to unwind positions, which removes leverage from the system. Stocks go down. I think yields go up. I think crypto sort of TBD. At the end of the day, the authorities will respond with printed money if there's a financial calamity. So whether or not Bitcoin and crypto gets ahead of that by saying, okay, well, rest of the markets are melting down. We believe that there's going to be financial stimulus. So instead of like going down with the NASDAQ, Bitcoin goes the opposite and starts rising even as dollar yen strengthens and the rest of the global financial markets collapse. So that's kind of my view. I think dollar yen goes to 130 very quickly if the Fed does 50. It indicates via their dot plot that they're going to do even more. And I think that's the major sort of calamity that is staring global financial markets in the face.
And so what do you think about about Bitcoin? Is that decoupling happen right away, or is it happen some other time?
I don't think it happens right away. I think if we get sort of a massive sell-off, people sell what they can, not what they want. Bitcoin's a very liquid asset. People have a lot of illiquid assets on their books, especially if you're an investment manager. So if you have some Bitcoin, you dump it. If the basis comes down even further than where it is today, sort of that's the difference between Bitcoin and futures contracts. You see large hedge funds like Millennium and these pod shops who put on this basis trade, starting with the ETF launch earlier this year, unwind those positions and sell Bitcoin spot into very illiquid markets. So I think Bitcoin goes down with the rest of the markets, but quickly, as we sort of see a financial collapse in the early stages, Bitcoin will say, okay, I believe that the markets will respond positively to more printed money. Janet Yellen and Jay Powell can afford a financial collapse a few weeks before the election, especially if they want Harris to beat Donald Trump.
Not to dial it in too much, but Bitcoin currently right around 60 grand. If we get 50, where does Bitcoin go? If we get 25, where does Bitcoin go? Do you have that specific of a prediction?
I think 25, unchanged. Not much is going to happen. I think that's sort of, everyone expected 25. I think if they go 50, that will be nuclear catastrophe for financial markets 1 or 2 trading days after the effect. You'll see a massive rally and everything because everyone believes that the more they cut rates, the better. But I actually think it points to a deeper rot in the global financial system, and that will come through in much more depressed prices after the fact.
Samson Mao was on Markets Daily recently and predicted that Bitcoin could hit $1 million in 2025. That video saw a lot of reaction from the CoinDesk audience, a lot of engagement. What do you think of that prediction? Could it hit $1 million next year?
Sure, but I don't think it will. I still have I have $1 million price target. I'm more of a 2026, 2027 sort of person. I think next year we really get a ramp up in fiscal spending, regardless of who wins the U.S. election. And if the U.S. dollar declines a lot, then China has room to enact stimulus as well and keep the yuan stable. And then you have the rest of the other major central banks are following in the footsteps of the Fed. They look at the Fed, they're easing, so we can ease too. We can do as much as the Fed is, and our exchange rate isn't going to get trashed. And so that's what I think happens once you get the new president, whoever it is in the U.S., because both Harris and Trump are committed to spending lots of money. Trump is committed to cutting taxes, and Harris is committed to welfare payments.
Arthur, I was listening to a podcast you were on not too long ago, and you were talking about how you think that this cycle is the one where I think your terminology was the sovereign debt breaks. And I'm curious, when you talk about a cycle, what is that cycle that we're in right now? How long is that cycle?
I don't know how long this cycle is. Really, it depends. But I believe that if you think about the global reserve currency, the US dollar, and all the wars and all the spending that needs to happen to keep the system intact, we're at this precipice where you can go either way. You could have a sort of a massive austerity, massive deleveraging, maybe a revolution, or the authorities can try to keep things stable by fixing the price of government bonds and printing as much money as possible to placate their electorate, whether that's in the United States, that's in the EU, that's in China, that's in Japan. Every single major economic bloc or country runs a similar sort of fiat fractional-based financial system, regardless of whether they're democratic, autocratic, communist, capitalist, whatever. Those are all sort of smoke screens. At the end of the day, everybody prints money. Everybody has a fiat fractional banking system. Everybody needs inflation. Everybody needs to take their savers' wealth and steal it so that the government can afford its spending programs, whether that's to fund wars or that's to do, Green New Deals, or it's to onshore production, or it's climate change policies, or it's, welfare payments to the poorer individuals who are losing out in sort of this economic transformation, AI and all this kind of stuff. There's so many reasons why the government needs to spend money and not try to tighten its belt and restore confidence in these fiat currencies that we exist with.
I mean, if you do the math and do all this on paper, as you've done, in Crypto Trader Digest, I was just going to say, we're closet fans over here at CoinDesk. There's a bunch of us that read it religiously. But, I mean, the collapse is always around the corner, right? And but somehow the authorities, they just keep managing to escape by the seat of their pants, and they pull a rabbit out of a hat with whatever it is, helicopter money or whatever. But I guess that's the question is, can they continue to just keep things going?
Sure, and Bitcoin can go to $1 million to 10 million. Bitcoin's what, 1 point something trillion dollar market cap. It's magic internet money that was created out of thin air, starting in 2009. Bitcoin is the antidote to what has happened. Yes, okay, they've printed a lot of money globally, the US being the most egregious with it, and the reaction has been Bitcoin. And we have this cryptocurrency ecosystem that has thrived based on all this printed money. And we have all these different types of assets that are created and have value because we have such a up financial system. So I wouldn't say they're getting away with it. Bitcoin's a smoke alarm. It's telling us that there's something wrong here.
Arthur, when you look at the crypto markets, when you look at the commentary around crypto markets, I know you create a lot of your own content. You participate in a lot of content like this podcast. What are people not talking about enough?
Patience. I think everyone is, Bitcoin needs to go to $1 million today, next year, because I took a bunch of leverage, or, my whole net worth is in this particular cryptocurrency. And, they hear the things, but the imminent collapse, all the debt, and they're like, well, why isn't it happening yet? Why not now? Like, I see all these things. I believe what you're saying. It's super fucked up. Politics is fucked up. Finance is fucked up. And why isn't, Bitcoin responding? Or why isn't the crypto that I own responding? And I think it's just patience, right? It's been a little over a decade, and we've created this entire new financial ecosystem. We have millions of people around the world who have Bitcoin, Ethereum, Solana, whatever, wallets. It's a very successful financial experiment to date, but it's not going to just all of a sudden just go to some ridiculous value just because you have a lot of leverage or you bought a lot of it yesterday. So I think patience is something that people need to understand, because if you believe in the math and the law of compounding interest, then it's inescapable. The system must print money, must deflate, must debase the currency to attempt to survive. And every other major civilization has done the same thing. And at the end of the day, inflation is hoisted upon the people, and some sort of revolution happens. So the history is 100 for 100. Just wait.
Hey everyone, did you know 52 million Americans own cryptocurrencies? That's not just a number, it's a movement, economic, social, and political. Decentralized finance, blockchain, and digital currencies are more than buzzwords, they are the future. This November, it's on us to show up and step up. We need to protect crypto to ensure it continues to fuel innovation and freedom for our families and businesses. Don't let this opportunity slip by. The future of crypto is on the line. Make your voice heard this November and pledge to vote now at standwithcrypto.org/pledge.
Arthur, just to get into one of the specific market factors that have emerged this year, which is all these ETFs. And you were actually... you previously traded ETFs at Citigroup
Yes.
So love to hear. And again, I was just listening to this other podcast where you were talking about kind of the role of the market makers and that dynamic. But curious, just generally speaking, what is your kind of big take on what are the implications of now ETFs being kind of a major factor in this market?
So I think at the end of the day, ETFs are for people who want the price performance of Bitcoin. They don't want to own Bitcoin. They don't want to be their own financial institution. They want to outsource that to Larry Fink, BlackRock, and all these other major institutions, which is fine. Bitcoin, you can do whatever you want with it. What does that mean? You're a passive investor and you're not actually using the protocol. So if we take this to the extreme and every single Bitcoin is owned by BlackRock or a similar sort of institution, then the network goes to zero because no one's actually using it. So the reason why Bitcoin has value is because we use it. It's not like gold. I can hold gold in a vault for eternity and it's still gold. It's still the chemical property of being gold. If I don't do anything with the Bitcoin, then the miners don't get paid and the network dies. And that's a fundamental, a very nuanced difference between Bitcoin and gold, which I think is not a problem today. It could be a problem in the future. But at the end of the day, if you're thinking about Why now? Why did BlackRock get an ETF approval in 6 months and the Winkle clowns couldn't get one in 10 years, right? They both live in New York. They're both billionaires, both very rich. Why weren't they given one and BlackRock was giving one in 6 months? Well, at the end of the day, you want the same financial institutions to control the wealth that can ultimately be appropriated by the government at the flick of a switch. BlackRock is just another arm of the US government, just the same as any other large Chinese asset managers, an arm of the Chinese government. And so if you're thinking about, I need to make sure that the wealth doesn't escape into this Bitcoin thing because it actually is very, very useful for the average person. Well, most people are lazy. They don't actually want to deal with being their own financial institution. So let me give them a very easy product that they can 2 clicks have the Bitcoin price appreciation, but not actually be able to move their money outside of the system. And so that's why these ETFs are around. That's where they're very successful because it's very easy to do. And the government likes them because all the money stays at the same institutions. And if they need to go and they say, BlackRock, now the tax is 50% on AUM, they think, here you go, government. And there goes your Bitcoin.
Arthur, I think that's really interesting what you just said. If people don't use Bitcoin, it goes to zero. It doesn't function the way in which everyone who operates in this industry wants it to function. Talk to me about what could happen in the future there. If this happens, comes to fruition, people aren't using Bitcoin, what does that problem look like?
It looks like revenue from miners goes down. It looks like, how do they afford the CapEx? Difficulty adjust, that kind of thing. I mean, I think it's a very long tail sort of situation if we don't have any use cases for Bitcoin. And obviously that's sort of why I love Ordinals and, Bitcoin layer 2 DeFi, all these sort of things. Like, let's pay the miners, let's do something with this thing and create some usability for people so that people are using it, people are spending money, and we sort of take this problem and remove it as a problem from the future.
Arthur, so I feel like we could go a lot of directions with this, but I mean, one thing that I think was an interesting point was that as the Wall Street firms, the market makers who are doing the kind of redemptions of, in the baskets with the ETFs, that would pull Wall Street kind of into, like the physical Bitcoin trade. I don't know. What do you think about that?
They want fees. These are great fee generating machines. These are the most successful launch of ETFs in the history of ETFs, and passive investing dominates financial markets. So why do you see Lutnick, Cantor Fitzgerald CEO, stumping for Tether and Bitcoin? Because this firm makes a lot of money being a custodian. Well, I don't know, the custodian, they help them trade bonds or whatnot. So if those type of folks, or Jamie Dimon and JP Morgan, are market makers for this ETF, they make money. And they're going to be out there beating the drum. Oh, yeah, well, I guess what? Bitcoin has a use case. The fiscal situation is really fucked up. If you believe that, hey, I've got this product for you. Look at the history of it. It's done very well, volatility adjusted. Just buy this, financial product and pay us some fees. So that's why they love it, because they're making money off of it.
Just to sort of shift gears a little bit, but try to pivot off that a little bit. So, you've done some really interesting things this year at Maelstrom, which is your family office, your investment fund, right?
Yes.
And you launched this Ordinals inscription series, the Airheads, which is hilarious, by the way.
Thank you.
And then you also, we just put an item in the Protocol Village column today about this first grant you provided to the Bitcoin Core, open source developer, which is a super interesting thing that you've done. And maybe I'd love to hear about those, but maybe just to kind of set the table here, where do you rank in terms of Bitcoin Maxi, Ethereum, openness to DeFi? I'd love to hear just kind of your general, what kind of coiner are you? If you can,
I guess I'm a flexi coiner. An avid shit coiner.
I knew you were going to say that.
But I say, if I think about the taxonomy of how I look at crypto, Bitcoin is money. No other crypto is money. It's the hardest money that we've created in human history. Bitcoin cares about security of the network. Bitcoin cares about an immutable blockchain. Ethereum is not money, regardless of what people say. They decided not to be money in 2016 when the community allowed a hard fork to happen to pay back the DAO hack folks. Ethereum wants to be the best decentralized computer ever, and it is so far. I put Solana in that camp. Obviously, I'm a big Aptos person right now. They're also trying to enter this sphere. And then you have a lot of other applications. So they want to do something on one of these networks. Decentralized finance is something I'm very passionate about because I believe that the rest of the world should have access to financial products at the ease of going on the internet and clicking a few buttons, which is not really the case for most people out of the United States and Western Europe. They have pretty f***ed up financial systems. That's why DeFi makes sense for those folks. So I like all this stuff. It's all an experiment. It's some things are 10 years old, 15 years old Bitcoin, and other things are less than a year old. But we're trying to sort of create a completely new system and give anyone with an internet connection a choice of how they want to save, how they want to invest, how they want to express themselves culturally over the internet.
And for your NFT collection, like why you chose to go in now on Bitcoin Ordinals inscriptions, what was that? What was the thinking there? Or what's your goal for that project?
So the goal, so we're an investor in Oil Wallet, and they are.
Yeah, I met one of their guys, by the way, at Bitcoin Nashville at the party at the Parthenon. It was talked with him for a while, but anyway, go ahead.
Yeah, so we're an investor in this wallet, and how do we create some buzz about Ordinals? Well, let's do an Ordinals drop. Now, I just don't want to do another, PFP 10,000 AI generated collection. We've done that to death. So what can we do that is specific to Ordinals that you can't do this on any other protocol? So that was something to do with the recursive inscriptions. The more assets that you hold in your Oil wallet at Mint, the fatter your airhead. And it's all done on chain.
Got it.
And so we want to show artists and creatives, look at what we've done here. I actually don't care what happens to the price of these things. I just want to see people be inspired to do other things, show the capabilities of the Oil wallet. Here's what you can do with this, and show the capabilities of Ordinals. What sort of creative minds can create something completely unique that can only exist on Ordinals that further bolsters the ability to bring culture onto the Bitcoin blockchain. So that's really the goal. I mean, of course, I hope that all these airheads are super duper valuable in the future, but the goal is inspire others to do other sorts of derivative works using Ordinals and inscriptions.
Arthur, I want to pivot in just a moment so we can learn a little bit more about you. But my last question for you on Maelstrom is, what's your investment thesis? What kind of projects are you looking at?
So right now we've done a lot of investing in sort of late 2022 and 2023 and a lot of infrastructure stuff. Did a lot of ETH staking projects. We've done a few AI infrastructure things. I think right now we're seeing a lot of projects are a bit too expensive for us in sort of the seed stage. And so we're focusing more on being helpful to our projects, looking at our liquid portfolio, and we'll probably start, investing again when we see some interesting things that are like 3 to 5 years out, sort of past this cycle into the next cycle.
All right, Arthur, we're going to have to leave it there. Thank you so much for joining today's episode of Markets Daily. And thank you to my very special co-host, Brad Cowan, for adding to the insightful discussion. And a big, big thank you to you, everyone who watched and listened to today's episode. If you love Markets Daily, subscribe to the CoinDesk Podcast Network. That's available on all podcast platforms. And subscribe to our YouTube channel if you would prefer to watch. Like this video, leave comments, whether they are good or bad. We will take the feedback. We will improve the show. We love you so much, and we'll see you tomorrow.